After two phenomenal years on the stock market, 2025 is off to a little bit of a rough start. So if you're asking yourself, where is the market going in 2025? I have 5 predictions for you, and I have a bonus here at the end. Very different market conditions going into this year than we had over the last couple of years. So the opportunities are going to be very different as well. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube and subscribe to my newsletter, Asymmetric Investing. There you can see my market beating portfolio. I buy new stocks every single month from the asymmetric universe. Those are stocks that I do deep dives on, tell you exactly what I like, what I don't like, why they have 10x potential over the next 10 years. That's where the name asymmetric investing comes from. Had some huge wins in 2024, and I think there are big opportunities again in 2025. But let's get to these 5 predictions about the market overall. I'll be back with that in just a second. All right, if you are serious about investing, you need to know about public.com. That's where you can invest in everything from stocks to options, bonds, and even crypto. They even offer some of the highest yields in the industry, like the bond accounts, 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools that you need to make informed investment decisions. Like their built-in AI called Alpha, it doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Now, Public is a FINRA registered, SIPC insured, US-based company with customer support teams that actually care. The bottom line, your investments deserve a platform that takes them as seriously as you do. You can fund an account in 5 minutes or less at public.com/ASYM and get up to $10,000 when you transfer in an old portfolio. That's public.com/ASYM. This ad was paid for by Public Investing. Full disclosure is in the video description. Prediction number 1, I think Alphabet is going to be the best Mag 7 stock, and I don't actually think it's going to be close this year. This comes down to a number of things. It comes down to Alphabet's increasing growth, realization that they're not going to be disrupted by artificial intelligence. That may actually be a growth driver for the company going forward, and valuation. Let's get to each one of those. And I'm going to start with the valuation piece. The first chart I'm showing here is the price to earnings multiple that investors are paying for each of these Mag 7 stocks. This is a busy chart, but the one to look at is the purple line. Alphabet is currently trading for 25.7 times earnings. That is the cheapest multiple of the Mag 7 stocks. I wouldn't necessarily call this a value stock, but given the company's growth rate and the massive businesses that it has, the moat it has around those businesses, I think this is a really great value for a company of this quality. Another way to look at valuation is price to sales multiple. This doesn't factor in things like margins. That's why you see Nvidia being so much higher than all of its competitors. It's also why you see Amazon being lower. They are selling more hard goods, so their margins are just naturally going to be lower as a result. But out of those other 5 companies, Alphabet is the cheapest from a price to sales standpoint. So Alphabet is the cheapest stock out of all of these Mag 7 stocks. And you have to wonder why when you look at a chart like this, which is the 1-year revenue growth of Alphabet. Look at this. The company was not growing significantly in 2023. That's because of impacts from Apple's ATT policies. That slowed the growth in advertising revenue, hurt the search business, but that is reversed in 2024 and now going into 2025 as well. The company is growing significantly into double digits, not only growing in search, it's growing in every single one of its markets. Google Cloud is growing at about 30% on an annualized basis. Then you have businesses that are really small and not really appreciated by the market, like Waymo. Waymo's a money-losing business, but this could disrupt transportation. So you have better growth and better value than a lot of its Mag 7 competitors. I think the market sentiment around Alphabet is going to move higher in 2025. It's very possible that the sentiment around some of these other stocks is going to actually go lower. Look at a company like Tesla trading at a very high multiple, now no longer a growth company. You can say the exact same thing about Apple. No growth coming out of either of those 2 companies, and yet they trade for higher multiples than Alphabet. So Mag 7 has been the most important place to be for investors, and I think Alphabet is going to take its place as the best Mag 7 stock in 2025. Prediction number 2 is I think autonomous driving is going to be the story of the year in 2025. And it's not Tesla that's leading the market there. Remember, Tesla has a level 2 autonomous driving system. It's possible that they start testing higher level 3, level 4 autonomous driving systems in 2025. That's what the promise of the robotaxi was. But real products are starting to hit the road. Level 3, level 4 autonomy with autonomy coming from companies like Mercedes, Ford, General Motors, and I mentioned before, Alphabet's Waymo. Waymo is going to scale this year Only in a handful of cities right now, but I wouldn't be surprised if that's in excess of 20 cities that could have tens of thousands of vehicles on the road by the end of 2025. And that's just going to be the start. The two companies to watch, I think, are going to be Lyft and Uber. These are the ride-sharing companies that are enabling autonomous vehicles to be used by thousands, potentially millions of people by the end of the decade. We know that both of these companies have partnerships with a number of autonomous driving companies. Waymo, May Mobility, Mobileye. These are companies that are creating the technology and the vehicles, but they don't necessarily want to be a ride-sharing company. So there's a place in the market for Lyft and Uber to expand their market. That market could potentially be 10 times bigger if there is full autonomy and there's a plethora of vehicles. Supply is the current constraint in a lot of these ride-sharing markets. The reason that Uber has won the market so far is because they have more supply of drivers than Lyft does. Does that change in an autonomous world where Lyft could launch thousands of autonomous vehicles in any city around the world and potentially take market share? Now, I've covered these two companies on asymmetric investing, stocks that I have bought recently, because I think autonomy is going to be a tailwind behind ride sharing that business overall. But Lyft is the one that has maybe even more than 10x, maybe 100x potential if they're able to compete on more level footing with Uber and get the tailwind from this market being much bigger in autonomy. Don't sleep on the fact that every single automaker around the world has a strategy to get autonomous vehicles in customers' hands before the end of the decade. Some of that is going to start happening in 2025, but the story is being written in 2025. Everybody from General Motors to Ford, Volkswagen, BYD, Polestar, Rivian, everybody has an autonomous vehicle story. Tesla is the only company that has a valuation where that autonomy is actually priced in. That's, I think, the worry for investors. So where's the opportunity in autonomous driving? I think three companies have tremendous opportunities, all three that I own in the asymmetric portfolio. That is Lyft and Uber, that ride-sharing network with autonomous vehicles on the supply side. And then Mobileye. Mobileye is a company providing technology, chips, imaging sensors for automakers all around the world. They could potentially supply autonomous hardware and software to millions of vehicles before the end of the decade. And this isn't going to be a $100 product like their current ADAS system. This is going to be thousands of dollars per vehicle. Some of those vehicles from Volkswagen are going to be hitting the roads in 2025. Further launches are going to happen in 2026 and 2027. So the market is going to really start paying attention to autonomy and the growth potential there in 2025. I think it's time for investors to be building out their strategy and their positions in autonomous driving in 2025. That's why this is the number 2 area that I think is going to have tremendous growth in 2025. The third prediction is that mergers and acquisitions and IPOs are going to explode this year. That entire market has basically been in a freeze over the past couple of years, in part because the federal government and the FTC has not allowed a lot of mergers to take place, especially in the technology space. But that's starting to change. And there's a few things that are going to drive this. One, there's an unprecedented amount of cash on companies' balance sheets. Businesses are extremely profitable, and yet there are companies that are being left behind that are in poor strategic positions, but maybe have valuable technology or products that other companies would like to acquire. So M&A activity could pick. We already saw that early in 2025 with Disney's announcement that it was going to spin off its Hulu Live business to Fubo. Fubo is its own public company, but in a lot of the ways, that's like Disney taking control of Fubo because they're now going to have a 70% stake in the company. I don't know if that deal gets done in 2023 or 2024. So that's the kind of thing that's going to pick up in 2025. There's a number of companies just in media that really need to figure out what their strategy is going to be and maybe make a move this year. Peacock, I think, is really in trouble. They continue to lose money. Doesn't really make sense for them to be a business under the Comcast umbrella. Warner Brothers Discovery, Paramount, they both need to figure out what they're going to do in the future or they're going to be in worse and worse shape as their competitors scale in streaming. Remember, you not only have Netflix already with over 200 million subscribers, Disney has over 100 million subscribers for Disney Plus, and they're launching ESPN over the top before the end of 2025. That's going to make them an even more powerful player. So you have those two companies in the lead. Add in Amazon to that, and you don't want to be the third, fourth, fifth player in the streaming business. So they need to figure out, are they going to be able to merge with each other, get some sort of scale in that business? I think there's going to be a lot of moves in Hollywood in 2025. Same thing is going to take place in the tech industry. Those tech acquisitions have essentially been frozen over the last 4 years. That could open up. That means Startups being acquired for their talent, for their technology, not necessarily just for their balance sheet. It also means that big tech companies could make tuck-in acquisitions. As AI agents play a bigger and bigger role in the rollout of artificial intelligence, does it make sense to have dozens and dozens of SaaS companies? Or is somebody just going to scoop them all up and have one strategy to bring to market and offer more solutions than they currently can today? I think that could absolutely be the place. Maybe a company to acquire some of those players is Salesforce. Maybe it's Oracle. It could be Microsoft. They have been acquisitive in the past. I think those M&A pipelines are going to start to open up in 2025. That could lead to some big returns for companies that are acquired and widening moats, especially in the tech and media landscape for the companies that are acquiring their smaller competitors. From the IPO standpoint, we have a number of companies that probably would like to have gone public over the past couple of years, haven't for a variety of reasons. The market is now much stronger. It makes a lot more sense for them to go public. A few to keep an eye on: Stripe, Circle, which makes the USDC token. They're related to Coinbase, but I think they could go public in 2025. Discord and Carvana are a couple that have also been kind of circling the IPO market. I think all four of those are going to go public, but there's going to be other big names that are going to go public in 2025. That will provide new opportunities for investors. I'll be checking out the most important of those as they come public. So keep an eye out here if there are any major announcements, because there's a lot of opportunity with some of those still private companies once they hit public markets. Fourth prediction is that the AI bubble is going to start to deflate. Here's what I mean by that. In the last couple of years, since the ChatGPT moment in late 2022, we have seen artificial intelligence be the story of the market. The problem is it's not really the reality of the market. Revenue and earnings or free cash flow have not really flowed from that story. Yes, OpenAI has raised a ton of money at a very, very high valuation, but they haven't made money. Microsoft, not making as much money as you might think in artificial intelligence. Even adoption, very, very low with products like their Copilot. NVIDIA's valuation has gone absolutely crazy. At the same time, their growth rate is starting to slow and their margins are starting to come down as well. So there's going to start being pockets of pressure in artificial intelligence. Some of these companies that don't have fundamental growth and growth in cash flow are going to start to deflate. We saw that with Adobe over the past year. Story was that they were going to be a leader in artificial intelligence. Maybe they're going to be more disrupted in the AI space. That stock has come down significantly. We saw growth in companies like SoundHound. Does that make sense given the fact that they're losing money? Wouldn't be surprised to see that stock come down in 2025 even further than it already has. Does Tesla's AI story still make sense in 2025 when NVIDIA said that they're going to make a lot of the capabilities that Tesla is doing in-house available to other automakers? Everyone wanted to tell an AI story in 2023 and 2024. This year, we're going to start to tell the story about where is their actual profits in artificial intelligence. And that's going to be a pressure that the stock market is going to put on these companies because we need to have answers, not just a story. And that is going to become a real reality for a lot of companies this year. And I think it's going to hurt a lot of valuations that were just built on speculation and not necessarily fundamental advantages that they have in the AI space. So keep an eye on that. It's something I've been covering a lot in my changing and evolving thoughts on artificial intelligence and where there's ultimately value for investors long term. Another AI play that I think looks much, much better than a lot of people realize is Alphabet. Leading infrastructure, leading distribution, and arguably some of the best models in AI today. Not necessarily the most fun play in AI, but maybe the most profitable for investors. The fifth prediction is at least one of the top 10 electric vehicle manufacturers by market cap is going to go bankrupt in 2025, potentially even more than that. Here's a list of those companies from companiesmarketcap.com. You can see that Tesla, obviously the leader, they are not in danger of going bankrupt. Xiaomi and Li Auto, likely in the same boat, much larger businesses, and they have the China effect. So funding a little bit different than you have with US companies. Rivian, they have a much higher market cap. They do have the funding that's coming from Volkswagen. So likely that they have a lifeline through 2025. But once you start to get lower than that, you start to get companies that are looking extremely risky. Lucid Motors, I think the only real positive story there is maybe the Saudi Arabian investment fund is going to bail them out. But if that's the upside for Lucid, that's a pretty terrible upside for the business. I think they could see huge declines. And then you get companies that are in real trouble. Polestar is one. They're related to Volvo, but looks like Volvo has their own electric vehicle strategy. So this is a global list. But for the US-based companies, I think Rivian, Lucid, For those US-based companies, I think Rivian and Lucid are going to face some real financial challenges as they continue to burn cash. I'll put some of these charts up here, but they're just burning cash at an absolutely astronomical rate, and they're going to have to continue to raise funds, whether that's from other automakers, whether it's from public markets, maybe raising debt, although that's getting harder and harder. So it may sound surprising at the start of 2025, but by the time we get to the end of this year, we're going to have a lot of the legacy automakers continue to take market share, continue to increase their production of electric vehicles. That's going to put more pressure on these companies that have worse balance sheets. And this is a downward spiral when it happens. And so don't be surprised if at least one of these seemingly major electric vehicle companies files for bankruptcy by the end of this year. Now, my bonus prediction, what is the stock market going to do? I think the S&P 500 is going to be up, but it's going to be up by less than 5% this year. That may not be as bad as it seems, and let me explain why. This is a look at the heat map for the S&P 500, and this has the performance over the past year. It also has the size of these boxes is related to the market cap and the weight in the S&P 500 index itself. So when people quote the S&P 500, they're actually quoting the weight of NVIDIA as the size of company that it is within this index. Same thing with Microsoft. So if we had, like I talked about earlier, some weakness in companies like Apple, I think extremely highly valued right now. Same thing with NVIDIA, could pull back. Microsoft, if that AI story starts to unravel a little bit, maybe that growth isn't there, very possible that they're going to project for negative free cash flow if they end up spending $80 billion and continue to grow that in 2026. Look for that trajectory to be really interesting to watch because they're spending a ton of money on building out their AI infrastructure. But the growth from AI and the profits from AI have not materialized yet. If some of these bigger companies, banks in the same boat, if some of these bigger companies underperform the market, that can make the market overall fall, even if smaller companies that I typically own in the asymmetric portfolio, end up outperforming the market. So the S&P 500, I don't think is going to be in for a very good year, but I think that's going to be because it's bad for companies like the Mag 7 overall, and it's going to be good for smaller companies who are going to benefit from multiple expansion in 2025. So there you have it, my 5 predictions for the year, including my bonus, what I think the S&P 500 is going to do. What do you think we should expect from the market in 2025? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. And like I said, check out Asymmetric Investing, my newsletter. You can see my buys every single month. I give weekly updates on how the asymmetric portfolio is doing, and that portfolio beat the market by a wide margin in 2024. So hopefully that performance will continue again in 2025. But I'm doing all that work in public to show how you can build a valuable portfolio from nothing using the principles that I implement in asymmetric investing. So let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.